Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, we're going to be diving into the current market sentiment and how that is not the sentiment that is being delivered to us via these financial institutions. And I do not think that it is by accident. I think that everything is happening the way that it's happening right now on purpose, as we are set to get huge regulatory announcements in the coming weeks/months ahead that is going to allow financial institutions to finally onboard into this space. Hint, hint, at the exact moment that the total cryptocurrency market cap decide to finally have a pullback and has shed a whole bunch of weight compared to the previous run that we saw this year, right before institutions are set to get in at a granular scale into this digital asset ecosystem. So I want to show you guys perspectives that have recently come to light from the likes of BCB Group, the Almex Group, BlackRock, Franklin Templeton, and even the IMF. So that way you guys can see that this current sentiment that has been lingering in the digital asset ecosystem is all temporary. And if you guys have watched previous video breakdowns of ours, it is due to the fundamental backdrop weighing on risk sentiment. However, the underlying infrastructure in crypto has never been this bullish. The regulatory environment and the landscape that is going to allow financial institutions to onboard at a very rapid pace is, for a fact, being built out. And you do not want to get left behind by thinking that this pullback that we're currently living through is going to be permanent. I'm personally, again, not financial advice, taking these discounted days as opportunities to dollar cost average into blue chip digital assets that I personally believe are going to perform well over the long-term horizon. So with that being said, let's dive into a couple of the panel discussionists that we have to share with you guys today. As always, I got to be very careful with how I word my videos moving forward if they're going to be uploaded to YouTube. So I do apologize for the shift in content and the kind of brief vocabulary that I'll be utilizing moving forward to make sure that these videos don't get taken down. But as always, bringing you guys some of the realest research in the game, let's lock in and let's listen to some industry-leading experts that have recently said things on stage over the past couple of weeks from October, considering that October was one of the most devastating months that crypto has ever seen. At the same exact time, we saw institutional panelists sitting on stage saying that if banks do not adopt crypto, they will get left behind.
And so being in the middle where we've been, tier one regulated, we have tier one banking partners that we provide. Being in this middle ground, I think that's kind of what stablecoins are also doing, is creating that middle ground between the TradFi world and the DeFi world. And this year you've seen more and more of that. So just in our business, the level of institutional clients are now coming to us that want to leverage stablecoins for treasury services or want to use it for cross-border payments. Remittance businesses now using it. It's already far outweighing anything of the interest last year. So the acceleration is really there. I think what we're going to see as we move into the future is, I don't think we're going to get to a point in 2026 where there's whether you're paying for your coffee with crypto. I don't think we're at that, but I call it the kind of the invisible upgrade, where I think your traditional finance, is going to start leveraging blockchain technology, and you're going to suddenly experience that instead of your bank transfers taking 3 days and it's shutting down at 5 o'clock on a Friday, that suddenly you are able to move money globally within seconds, 24/7. All the things that stablecoins are giving, I think the traditional markets are going to start adopting because they have to keep up with it. They have to keep up with it.
I think that's kind of what's pushed institutions. There's been definitely a sense of competitiveness, and if tier ones and if financial institutions don't sort of get ahead of things, they are going to fall behind. So
settlement has happened, so we really haven't seen the big move in it. So I still think that we are very early in what we are seeing, but you're going to see real use case in industry, real use case in banking. So you're seeing a new monetary framework is being built up, and while some people might be getting bullish on gold, but there's something else happening. And this is not your grandfather's gold. This is something else which is being built around, and you really need to be part and understand what's going on, or else you're going to get left out. And with a digital framework and decentralization and TradFi and DeFi and everything that's happening, you have a real framework is being built in front of you, right in front of you, with new and big winners. So when I see projects, so people are working on tokenizing unit assets. And if you look at the case of BlackRock and what they are looking to do with their fund business, real estate business, you really have a big future being built up. And this is coming from people who who didn't believe in blockchain or didn't believe in these things. You can go and Google their videos from 2-3 years ago where they didn't believe in this. And then you have people like Peter Schiff. And I saw a video last night of a guy who was banging about blockchain when it was $4,000 and Peter Schiff was ridiculing him. And yes, Peter Schiff is right on gold, which is at $5,000, but look where Bitcoin has gone to at the same time. People are excited about silver has gone to all-time high. It took 40 years to go back to that all-time high. That's not how long it takes Bitcoin and everything else to go. So you can be skeptic and miss out on everything, or you can take an interest and learn.
So it is a fact that these financial institutions know that if they do not adopt these technologies, they risk falling behind. And if you guys remember years ago, Larry Fink sat on stage and he mentioned that everything in the world is going to be tokenized. Well, at a recent Future Investment Summit, Larry Fink came out of the woodwork yet again and said this.
I would say the biggest question from central banks is what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving, ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that.
Two things I want you guys to focus on is he obviously, of course, mentioned how fast and the scale at which he thinks everything is going to come on chain is being lowballed, is being underevaluated by major countries and jurisdictions. And then he talked about how in the future, everything's going to move through digital wallets. That goes hand in hand with the video clip that we showed you guys from an industry leading expert, Sandy Call, that has valid credentials at the CFTC, the World Economic Forum, the DTCC, and is actively working at Franklin Templeton, where she said in a interview just a month ago, again, literally right before the pullback took place. I do not think that any of these things are coincidences. Again, call me conspiracy theorist or whatever, but all of these financial giants are coming out and they're starting to say, hey, banks that don't adopt are going to get left behind. All these things are going to be mandatory in the future. If you do not integrate them, again, you risk or lack competitiveness, right? Well, at the same exact time, the cryptocurrency market has one of the worst months in history. Right before the financial institutions are about to come on board, come on, guys and gals. If you're a smart, sophisticated, and educated retail investor, these things, these pullbacks, these shakeouts don't phase us because we know what is coming. If you just listen to the institutions, you listen to the giants that are actually controlling the markets, they are not bearish right now. They are excessively bullish in the crypto ecosystem. And I believe that that is for a reason, because they know what's coming. Listen to Sandy Call confirm exactly what Larry Fink just said, that having a digital wallet will be mandatory in the future.
When are we going to see the next catalyst? So you talked about the Genius Act being a big catalyst this year and recently. What's the next coming catalyst?
Yeah, well, this filing by NASDAQ to get approval to trade tokenized equities on the NASDAQ exchange, right? You also had Coinbase go in recently. They announced to the SEC to ask for permission to trade tokenized stock, right? This is going to be a catalyst that makes the Genius Act and the ability to trade stablecoins look minimal by comparison, right? That is, to me, once there are rules in place that are going to allow us to begin moving our traditional financial products onto these new rails with confidence, I think that is when you're going to just start to feel this whole pace of acceleration, this whole pace of change accelerate. And when I say you're going to see more change in the next 5 years than in the past 50, this is why, right? That legislation, that permission to start to tokenize our real world assets and use blockchain to administer them, that's probably coming within the next few months, right? At most another 18 months, right? And once that happens, it's going to become mandatory that you have a wallet to be able to handle these assets. It's going to become mandatory that you have payment methods that work on chain to be able to settle assets immediately, right? It changes the playing field in such a profound way. And it's going to, I think, really open up lots of new potential for.
Right. So long story short, she's talking about how it's going to become mandatory in the future. Yet the average retail investor is looking at their portfolio right now in fear, with this fear-based mindset that they might have been made the wrong investment due to the obvious, of course, lack of price action in altcoins as of recent. However, these financial institutions, the likes of the giants that I just shared with you guys, all of these videos stem from within the last 30 days. Do any of them seem worried about the current landscape in crypto? No. Again, ladies and gentlemen, we have to zoom out and we have to see the long-term perspective of the space and not be so short-minded. Last but not least, at the same exact time this October pullback started, we had the IMF managing director literally go out to say that as a country, she's warning them not to ignore this digital shift, this digital transformation where fiat is moving digital.
But generally, you tell them to embrace it?
I'm telling countries, accept reality. Fiat money is moving digital. The developments in crypto, both unbacked and backed, they're happening with exponential speed. So yeah, you can try to lock your country away from this. Good luck with it. So yes, I'm telling my members, understand it and then decide for yourself how you're going to operate in this world. But do not close your eyes to reality.
Georgine, one of the questions that the MD raised.
So think about this again from the perspective that I'm trying to piece together for you all. We had one of the most horrible months in terms of price action and one of the biggest liquidation events in crypto history in the month of October. While at the same time, you have all of these panelists that stem from large organizations, the likes of giants in this financial ecosystem that actually move markets, express excessively bullish vocabulary for the digital asset ecosystem in the coming months ahead. That to me is not a coincidence. That to me is a signal to prepare and position with these discounting opportunities for the future. Again, not financial advice. Last but not least, I can't just show you guys panel discussions. I also always like to bring you guys just some recent announcements from giants in this space. October 28th, 2025, all of the announcements that I'm sharing with you guys are as of recent, and this was huge. Wisdom Tree appoints BNY for banking as a service infrastructure for digital assets, advancing access to stablecoins and tokenized real-world assets. And what I really like about this is down here where it talks about how this latest expansion, let me zoom in for you guys because this is massive and coexists with another fundamental piece that just recently came out. This latest expansion of the Wisdom Tree Prime platform introduces new capabilities. Mind you, what Franklin Templeton Sandy Call just said, that we're going to have access to these new capabilities in digital wallets that we've never had access before. And it's going to create a level playing field.
Right. And once that happens, it's going to become mandatory that you have a wallet to be able to handle these assets. It's going to become mandatory that you have payment methods that work on chain to be able to settle assets immediately. Right. It changes the playing field in such a profound way
that allow crypto native users to remain on chain and seamlessly access Wisdom Tree's diversified range of tokenized real world assets, including digital funds and on-chain gold. Literally, we're going to be able to earn yield on-chain on gold in the near future, if not already. Through the collaboration with BNY, users have access to BNY's leading banking functionality in addition to blockchain rails, enabling on and off-ramp capabilities between the TradFi banking system and the app as they become available. So huge convergence right here between TradFi and DeFi capabilities. Now, this coexists with this announcement from a day before, the 27th of October, 2025. Time of recording is November 3rd. So all of these things happen within the last 30 days. Falcon Finance integrates Tether Gold XAUT to unlock gold-backed DeFi yield. This is again why we've stressed the importance of learning DeFi, learning the importance of earning yield on your assets over a prolonged period of time and just compounding and hodling instead of just hodling without earning yield. Hodling with earning yield is a very powerful tool that unlocks access to capabilities that our assets have never had the ability to do before. Falcon financed the first universal collateralization infrastructure. I like that word. That's a huge word right there. Collateralization. Infrastructure for powering on-chain liquidity and yield has integrated Tether Gold, the largest and most liquid gold-backed token, as a collateral for minting USDF. The collaboration introduces the world's most time-tested asset into Falcon's diversified collateral ecosystem, enabling users to gain exposure to gold store of value properties while earning sustainable DeFi native yield. The introduction of XAUT marks a milestone for real-world assets. Days before Larry Fink came on stage and said, people are underestimating the pace at which everything is going to be tokenized. Come on, guys and gals, we're smarter than that here at CYPRX, bringing one of the world's oldest and most trusted stores of value into Falcon's on-chain collateral ecosystem. It highlights the growing convergence of TradFi and DeFi through tokenized assets, giving users access to yield-generating liquidity backed by tangible value. So as always, just bringing you guys some of the realest announcements in the game, just keeping you on the loop with the institutional perspective. Do not have a fear-based approach right now. Buckle down, do research on blue chip digital asset projects that are likely to survive in the long term because they're being compliant with regulations. They're being compliant with real world asset and traditional finance integrations. I cannot stress enough that now is not the time to pay attention to bullish moonboy hopium. Now is the time to pay attention to fundamentals so that way you understand why the market's pulling back. We've delivered video breakdowns on that on our X platform so that way you guys have a thorough understanding of why the markets have recently been bearish. As always, bringing you guys some of the realest info in the game. Please do me a favor. It goes such a long way when you all hit that thumbs up button. It really, truly does boost the algorithm, push these video breakdowns out to more like-minded individuals like yourselves. If you're not already subscribed, make sure that you hit that subscribe button. And do me a favor as well, if you guys don't mind, turn on that notification bell. It seems as though some users are saying that they're not getting notified that we're posting videos. However, we tend to post videos every day, if not every other day. With all of that in mind, don't forget that if you all want extreme clarity into the fundamentals that go relatively unnoticed to the retail crowd, you guys always have access to the CYPRX research Discord. By heading over to CYPRXtrading.com, you have the most elaborate and exclusive, probably the most extensive global research team on the face of the internet right in the CYPRX Discord. Access to 24/7 global insights from all over the world, some of the best panel discussions that get hardly any views from the largest giants in the game, always shared in our private CYPRX Discord on a consistent flowing basis. I would love to see you guys inside the community. With that being said, I will see you guys in the next video breakdown.